following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call on this one and to pass a compliment to you. Taken a lot of classes from Tom since I became a Tiger back in 2009, and they were always phenomenal classes, and last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. Material was excellent. It was timely. So it was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the marker's ball.
Well, here it comes. Oh, my goodness. Have you seen anything like that? This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the June 5th. Terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a magnificent Monday. You know, our first course of action this morning is to make sure that we have a terrific Thursday, and we accomplish this by making sure we know our daily outcomes, folks. My first outcome this morning, well, it's to teach you how to master the tools for trading. And that includes the tools of the mind, because when you and I, when we can master the tools of our mind, we begin, what did I say, magnificent Monday, what the heck? Man, talk about a little brain contusion out there. I had some music in my ear, so I wasn't really thinking. But look, during the next hour, you'll hear me use terms like A to B equals CD, terms like swing points, Gartley butterfly patterns, candlesticks. And the candlesticks are just simply the signals that the sign makers of the markets use, the bulls and the bears, because they create those for us each and every day and for every time frame that we trade out here. Now, each of these patterns and signals on a standalone basis, they're what I call tactical tools. And knowing how to use tactical tools, well, it's really important. But you see, the real key to trading and investing, the real key to get your money to work harder for you than you do for it is to have a strategy. That's what I call mastering probability, because using tactics without strategy is a recipe for failure. And failure, folks, it's not an option in our playbook. Now, here's the key. Don't conclude that failure and losing money are the same things, because they're not. You see, in trading and investing, our only spoilage is money. Just like the food that goes bad in a refrigerator, yet most folks don't correlate that as throwing away money. And it is. So in trading and investing, what we do is we use stops. And as long as we have an exit strategy, one that covers both sides of the trade, then the loss of money is nothing more than spoilage resulting from a failed pattern that we've decided to take out there. It's what I call system expectancy, knowing your system expectancy, which is our ultimate performance tool. So today and every day, let's do what we can to think like a strategist, because strategists, they will slay the tactician all day long. So let's go look at one of our tools. This is the tool to help us think like a strategist. The tool I call a smile breeds a smile. You know, folks, smile and the world smiles with you. Cry and you cry alone. Or said a different way, everyone, and I mean everyone, likes to be around someone who smiles. Strangers can pass in the street, and if one of them smiles, the other is likely to smile in return. You know that to be true. Test it out. Test it out today. I guarantee it works. You see, a smile, no matter how brief, can uplift each of us. It's a gift. It's a gift that we can pass on to everyone we meet, let alone the gift that we give to ourselves. And it's a gift with the only cost being a little bit of effort. You know, I believe that there are three simple words that almost seem to have a magical property about them for creating a positive attitude in life. Yes, 3 words. You should write these down. The 3 words are feel supremely happy. That's it. Feel supremely happy, because when you feel supremely happy, what transpires is a shift in your state of mind. You know, a smile, folks, it is absolutely contagious. So let me leave you with this thought for the day. You're familiar with the phrase, the shot heard around the world. You know, the reference to the bullet that began the American Revolution. Of course, we might go look at the shot heard around the world this morning with Mario Draghi. Well, what the world needs, no matter what, it needs the smile heard around the world, and it starts with each of us. A smile, folks, it does breed a smile. It is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off out here. Right now, we got Dow futures up 46 points. They're trading out at 16,764. S&P futures up 4 points, trading out at 1929. Hey, I haven't said 1929 for a while. That's interesting. NASDAQ futures up 5 points, trading out at 37.48. Russell 2000 up 4.5 points, trading out at 11.33. King dollar on the move, 214 ticks to the upside, 21 pennies, trading out at 80.92. Probably plus, because I've got a 10-minute delay on my U.S. dollar index out here. Euro, we're going to take a look at that because of Mario Draghi's comments. He's probably on the stump right now, continuing to speak. And what a marketer this guy is. I'm telling you what. You may remember when the markets were crashing down back in the 2010 time frame, when they were moving lower with some conviction out there. He and some of his friends got together, and they created what was known as the European Financial Stability Facility or something like that, EFSF. I believe that was the name of it. And it was a marketing ploy out there. I don't know that it actually has been funded. I know that it went on for, it was then kind of referred to as a short-term mechanism. Then they went over and they created something called the ESM out there, the European Stability Mechanism out there. These guys are great marketers out there, really good at marketing. Well, what we want to know is, hey, what does it actually mean to us? So let's go take a look. We've got to focus in on the currency markets here this morning. And I'm going to say here, I'm going to go out on a limb, as I do each and every morning. Can you say pop and drop? Because I believe that is what may be in store for the day out here. But we'll see, because there are some tools we're going to take a look at. You know, unfortunately, they tell us the eventual direction. They can't really be used as a timing tool. But let's start off by taking a look at the euro-US dollar. So let's look at that first. Let's go see what that has done. Now, what we know about and if you're watching this on TigerTV, first, thanks so much for doing that. If you're listening on your radio, your mobile device at TFNN.mobi, remember, you can always catch the live stream of the show by going over to the homepage at TFNN.com. Upper right-hand side, you'll see a button, 3 smartphone devices on it. Click on that. The show will stream live to you, and you would see here in the upper left-hand corner a monthly chart for the euro, the upper right-hand corner a weekly chart for the euro, lower left daily, and bottom right a 30-minute chart. So we've got a bunch of different time frames here covered. Now, we'll start off with the monthly out here, because in the case of the monthly euro U.S. dollar, what it was doing, it was really attempting to break a long-term descending price channel out here by getting up to the top of that. Now, it actually broke the descending price channel. That's the red diagonal line you see on my screen here. That's using the largest number of co-located opens and closes. It doesn't matter whether it's an open or closed. And we're using the body of the candle, because the body of the candle is the essence of price. The wicks in a candle are nothing more than the extreme emotions out there. So the bodies of the candle have substantial meaning. Now, and using those extreme emotions as well, we've got those identified on the chart, and that's the black diagonal lines. That's using the wicks. That's using the upper level of the extreme emotion. That means the July 2008 high. That was out at 160.36. And the next high that we're using is back in May of 2011. So price had just slightly broken out of it the month of April. Looked like, boy, the euro really wanted higher price out there. The euro would be higher, the dollar would be weaker. Broke to the upside, was suggesting to move up to the 144.24 level. Just a simple A to B equals CD. Now, it's not as if that move still can't take place, because this A to B equals CD pattern has not been violated. But what we do know is that when price breaks out of a trend or breaks out of a channel, in this case here, it was both. It broke out of both, but now it's pulled back inside the trend. So it's pulled back inside that lower trend, And unless it breaks out of there, that was a false break to the upside. Now, how will we really know if it's a false break when we take a look at this longer-term chart? Is if it gets back inside the channel line. Now, you might be saying, hey, where's that price? Well, I can't tell you because I don't know which month it is. We got a lot of time left. It could be at about the 1.3296-ish type area out here. But at this stage, on a monthly chart, what we also have that's key, what we have is we've got a key reversal session. So for the month of May, you get a key reversal session. Those are bearish. They have bearish connotations, most certainly. So that's on the weekly chart. Now let's go take a look at that was the monthly chart. If we take a look at the weekly chart, you're going to see something very similar as well. But what we're also going to see is right now you've got price pulling back into the last swing point. So the last swing point out here on a weekly basis was created on February 7th. And the low there is 1.3476. If that, in fact, gets taken out, well, what you would see here is a move down to what is basically a sideways consolidation. Let me show you what that consolidation in essence looks like. And this becomes the next area, the next real target area for us to watch. It's this larger yellow box out here. A little sideways consolidation thus far going on inside the euro-US dollar. That says the lows right around 1.3343 are very important to be paying attention to. Now, we're going to switch back and forth. Oops, I didn't mean to do that. I'm going to switch back and forth. I'm going to go over to the TAS signal, to the market profile system out here. I've used this in the past. So we use it each day. We take a look at different elements. Well, what I've also got on here is the euro. So I've got the euro futures contract. And what's interesting about this, if we take a look at it, I'm going to put up the weekly chart now. So we just went to a weekly chart. We can see where it's pulling back to, into a set of swing points. But what it's also got here is at the price level right now of 1.3524. This is the futures contract that we're looking at. That is the weekly unfair low, or that is the weekly support level, or what should act as support. If, in fact, at the end of the week, which is tomorrow, we see the euro close below 1.3524, that's giving you an intermediate term signal to certainly not be long the euro and instead being short here. So we've got price moving up against a significant support level. Now, why is all this important? Well, all this is important for a number of reasons. Number one, especially if you listen to my show, you know that I track the euro-US dollar significantly because of its correlation. And I'm going to put up the correlation chart on my screen here this morning. What do I have here? So here's the euro-US dollar. And when the euro-US dollar is pointing in a different direction than the way that our S&P futures are trading, which is what we have going on now in a huge way, it points to a resolution. And that resolution, with the exception of really one time over the past couple of years here, resolves itself in the direction of the euro-yen. Not euro-US dollar. I might have said that. I apologize. It's the euro-yen that we're looking at. That's at the bottom of the screen here. When we come back, we're going to go out to Kevin in Safety Harbor. We're going to come back. We're going to also be taking a look at the currency pairs. We'll take specifically a look at the euro-yen. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up about 50, S&P up 4. Let's go down the street to Safety Harbor, Florida, to our man Kevin, who wants to take a look at Bank of America. Kevin, thanks for calling. Thanks for holding. How you doing this morning?
Like the show, Steve. I was just thinking, with ECB loosen up and so forth, that BAC should be, poised to move up a little bit. I know you guys don't like the banks or anything. I mean, I don't either. But it's just a trade. It's not nothing personal.
I've never said I don't like the banks.
Tom
I like banks, man. I like banks.
Citibank or BAC. Tom gets upset when you mention BAC or C.
I don't know. But tell me what you're what you're doing with Bank of America. What you're looking at. How I can help you there.
I want to. Well, I think this is a buying opportunity today. I think we're going to have some upsurge in the Bank of America.
Yeah. Well, right now in the pre-market here, it's trading at about 15.29. It closed out yesterday. Looks like about 15.21. So it's up about 8 pennies in the pre-market out here. If I take a look at it, are you by any chance, Kevin, watching us on Tiger TV?
No, sir.
Okay. If you were, what you would see is I've got 3 charts on my screen out here, 3 different time frames that we're going to take a look at in Bank of America. The left-hand side of the chart shows the 240-minute time frame, so a 4-hour time frame. Good time frame. Our man John Logan turned us on to the 240-minute time frame as a fairly decent time frame to be looking at with regard to his market profiles. Nice mathematical calculations that help us identify support and resistance areas. And what I'll tell you, Kevin, is that on the 240-minute chart, it says 1535, and it's not trading above that in the pre-market, is significant resistance. If it clears that area, then maybe your thesis of going long would be supported by the market profile. If I take a look at the daily chart out here, it shows a price point of 1531 being a resistance area. So a close above that 1535 on a 240-minute chart, a close above 1531 on a daily chart would say, hey, Kevin, you're on to something there. At least using the market profiles as one of your decision-making vehicles. And then
long
if I switch over...
Steve? You said long being what, 2 days, or you're talking about long?
Time frame. Kevin, I used to be in the crystal business. Millions. I'm talking millions of dollars. I owned retail stores at Disney World, Disneyland, Universal Studios, major casinos, every 20,000 retail stores, CVS's, Walgreens, all carried my crystal products. So, I sold millions and millions of dollars of crystal products. And unfortunately, and I looked in every box when I brought in crystal, I could not find the crystal ball that would work, that would be able to tell you, be able to tell you how many days or where things go out there.
What I was talking about was your terminology when you say long.
Long. You were talking about going long Bank of America, right?
Well, no, more of a trade just for 2 or 3 days.
What I can share with you. If you're looking for a trade of 2 or 3 days, what I would do is I would suggest that you become an expert of a number of different things out here, but certainly the A to B equals CD tool, and just take a look at short-term time frames. What I'm suggesting to you is that you're looking at entertaining a long trade in Bank of America. And what I'd like to say to you is that what Bank of America has is substantial resistance at prices around 1535, 1531, and on the weekly chart, 1553. In order to really support a long trade, right now I can tell you that the reward to risk really isn't in it.
Right.
Here at 1521, it's trading at 1529. At 1531, 1535 is resistance. That doesn't make sense. You would rather take a look at a momentum trade and wait till it clears those areas. And what I would also say to you is if you looked at the chart, huge supply line. There are going to be all kinds of folks that were trapped that had bought this, that thought it was a good idea to buy Bank of America on April 25th. And those folks bought somewhere between the level of 1593 and 1623. And what they saw was all their brothers and sisters jump out without parachutes on the next trading session on April 28th. Right. And there are 344 million of those folks that jumped out of the planes out there. That is huge supply line, because I can guarantee you if you were one of those people that bought on April 25th and you didn't use a stop, which basically qualifies as 99% of most folks that trade out there, you're sitting there saying, please come back so I can get my money out. That's what's called the supply line out there.
When is your next class on trading, Steve? Because I need to do more with learning how to use stops and so forth.
I think we'll probably put together one here over the course of the next couple of months out there. So, Kevin, I hope that helps you out. That was Bank of America. That was Kevin down the street from us in the Clearwater area. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading up 22 points, trading out at 16,759. S&P up 3, trading at 1930. Composite up 12 points, trading at 42.64. Russell 2000 up 3.5, trading out at 11.34. Apple's up $4, trading out at 6.49. Leading the charge to the upside out here, dollar-wise, we've got Illumina Inc. ILMN is a ticker symbol, up about 4% this morning, up $6. Verint Systems, VRNT, that's up 13%, up $6 as well. Apple up $4. Clovis Oncology, CLVS, up 7%, up a couple bucks and change. Google up $4. Tesla up $2.30. Ciena Corp up about 15% this morning, up nearly $3. Joy Global, haven't mentioned that name in a long time. JOY is the ticker symbol. Used to be JOYG. That is up about, where I just lost it. Up about 4%, up $2 and change. Amazon up a couple of bucks. To the downside, leading the charge out here, we've got PVH Corp off $8 right now, down 6%. Smith and Nephew, SNN is the ticker symbol, down 5% and $5. RCS Cap Corp, RCAP, down 7% off $1.54. Vera Bradley off $1.45 this morning. Medtronic, MDT off $1.21. Walgreens, wagging the dog here. It is off 88 cents this morning, down 1% out here. Okay, so the Dow's up 22 right now. Let's go back currency-wise. Let's go take a look at what's going on currency pair out here. Now, I'll make both the bullish and the bearish case, right? Whenever we take a look at the market, we need to really be taking a look at both. So we're looking at the euro, Japanese yen. We know that this tracks the U.S. stock market better than any other currency pair that's out there. And the first reaction this morning, well, first yesterday, what happened? First yesterday, we've seen price get up towards the first level of any type of a Gartley pattern. So we've got a Gartley buy pattern that completed out here on the trading session of May 29th. And if you go just simply from the high on March 7th, that's the A point of an A to B equals CD to the downside, to the low of May 29th out here, you'll see that the retracement, 0.382 retracement, first level 140.18. It didn't get all the way up there. It got up to a high of 139.95. Remember, we use these as guidelines, not necessarily as it has to hit something to the penny, to the tick, or what have you. Tick, pip, whatever it is that you're trading out there. But it did make that 0.382-ish retracement. Yesterday formed a doji candle. Today, we're seeing the leaves fall from the trees. Now, they fell from the trees pretty hard. In fact, there were a couple trees that were just simply cut down. Because in one trading session, it went all the way to the 0.618 retracement level. This is the daily chart that we're looking at. So now I'm just simply going from the low of May 29th to the high out here of yesterday, June 4th, out of 139.94. If I go from that low to the high, you'll see that the 0.618 retracement level is 138.72. If, in fact, the euro yen can muster the energy and it's done the retracement in essence in 1 day out here, well, then what it could be doing, this would be the bullish case, this could be setting up an A to B equals CD to the upside. And that's what the market needs. It needs the euro yen to continue with its thrust forward out here. Its A to B equals CD to the upside would be about 140.65. But it's going to have to, in order for that to occur, it needs to clear the 139.95. So from a bullish case, if you're a bull out here, you want to see, now again, it's a daily chart that we're looking at. So, of course, it always depends on your time frame that you're trading out here, right? So we're looking at a daily chart here. The bullish case is that it clears 139.95. If it does that, then you're likely to see it move up to the 140.65. Maybe it's the 141.18, maybe even 141.58 out there. But that is what it's saying. Now, because of that move down, that's why we need to go dig into what's going on under the covers here, meaning some shorter-term charts. So we're going to switch over to the shorter-term charts because with such quick action after Super Mario came out, well, what happened was, if we take a look at the euro-yen out here, it went into that extreme oversold condition. And what we have seen here, because those conditions have to be worked off, what we have seen here is just simply, at this stage, no more than just a bounce out of that extremely oversold condition. The question is, was the move to the downside overdone? And a 30-minute chart is what we're looking at right now. So we've gone to kind of an ultra short-term chart. And you can see on the 30-minute chart, you'll also see a 1 to 1.618 A to B equals CD to the downside. You see the 1 to 1.272. That's actually what it hit this morning. Here's your 0.618 retracement, similar to what we looked at on the daily chart out here. That's coming again off the lows back here from May 29th. So this, in essence, has set up a Gartley buy pattern. That Gartley buy pattern on the shorter-term chart, again, the 30-minute chart, looks like this. And we'll just put it, well, I guess I need to just kind of just put it right down. I'm going to put it right down here to the 0.618 area. Now, this is going to be the key. I think this is going to be one of the key charts for us to really be paying attention to. This morning inside the den, as futures were up 60 points or so, what I said to folks out there is get ready for the pop and drop. Fasten your seatbelts. Get ready for the pop and drop. And that was stimulated by what the reaction was to the euro-Japanese yen. Now we've seen a bit of a pop out here in the currency pair. But you see the way that this thing is cascaded off this C to D leg here? It really says to me that the work to the downside is not over. You got to expect when things get into a oversold or overbought condition, you have to expect those conditions to work themselves off. And that, in essence, is really what is going on here at this moment. So really key levels here as the 0.618 retracement level from the bullish side needs to hold. From the bearish side out here, if the 0.618 area fails, it just means the price gravitates its way down to the 0.786 area. That'd be 138.39 out there. And that's the level that would that you'd want to see actually price break through if it actually if it continues its journey downside. Real bearish out there, if we go back to the daily chart, is in fact that the euro yen just simply crushes through this 0.786 Gartley buy, because this 0.786 Gartley buy is a valid pattern out here, and if this fails, this will turn into a butterfly pattern. This will expand on the way down, and direction-wise, it will signal that the markets want to move lower out there. So what this has, just in summary, in the currency pairs, what we've taken a look at, when I put this chart up on our screen out here, we can take a look at the substantial divergence between the S&P futures. They've been on the rise, no question about it, but at the same time, we've seen the Euro-Japanese yen move south out there, and that always resolves itself in the direction of the currency pair out there. And this says to expect some type of retracement, some type of market retracement. How substantial it is, that I can't say, because there is not a tick-to-tick, a pip-to-pip correlation out here inside the currency pairs. Instead, because you can't really use it as a timing tool, it's a great tool. It is way better than any other forecaster that I've seen out there. Now, being in correlation charts out here, I'll show you one other correlation chart, and that's the GE chart. General Electric, I've shared this with you folks many, many times out here. General Electric is a great chart for giving us a indication as to whether or not the Dow itself wants to also correct. And when General Electric is going in the opposite direction of the Dow, it also signals an impending correction, retracement. So when I say correction, I don't think this is the big one, Alice, or what did the guy from Sanford and Sons, Elizabeth, I think, right? I think he used to say, this is the big one, Elizabeth. Like, I don't think this is the big one, but I do believe that the market is a bit tired here. It's had some nice work over the past 7-8 trading sessions, whatever it has been out there, and it's just a bit tired, and it could use a little bit of a retracement out here. I think it's a retracement worth buying. And we can see on the top portion of the chart is General Electric. And if you go back to about the May 13th time frame, between May 13th and looks like a high, maybe put in here around June 2nd, it was making a little bit of a lower high. Whereas in the Dow, it was actually making a higher high. So we have that divergence along with the divergence in the Euro Yen. It just says you've got to be cautious in the marketplace. So that's what's going on there. There's plenty of other things that are moving that are worthwhile for us to take a look at for sure. So let's start taking a look at some of those. We've got gold up $7. It was up to a high of about, $12.58, I believe, somewhere right around there. So let's go take a look at Goldilocks. Let's go see what she is doing here this morning. She or he. Let's take a look at gold. Let's put that on our chart out here. We take a look at today's trading session. So today's trading session, pretty important, because this is a nice bullish candle formation out here. And what I'm looking at when I'm circling the wagons. Those wagons I'm circling are really the past 4 trading sessions. So let's go. We'll color those in. I'm really referring to these 4. Well, that didn't work out very well. Let me do this here. Let's put these 4 trading sessions right here. This is a reversal pattern brought to us by and folks in the den will know the guy that it was brought to us by, Oda Nobunaga. We've got a guy in the den, and his name is Oda. It's his handle name is Oda Nobunaga. I'm assuming that he actually took it from the 16th century warlord out there that was really the initiator of the unification of Japan under the Shogun era back in the 16th century out there, and as a great warlord, because that's really what all these candle signals are. They are they're really they're descriptions of battles going on between bulls and bears out here. Well, this is what's referred to as the 3-river morning star out here, if in fact gold can hold these levels out here. Now, 4 candles. They call it Three River because usually it takes 3 candles to create an evening or a morning star out there, but it can be done in 4 sessions. Now, what today also is inside gold, gold has got a key reversal session going on. What's that mean? Well, gold is most certainly on the daily chart in an extended condition out here. What do I mean extended? Well, if we just simply take a look at the 14-period relative strength indicator, you can see prices below the 30 level out there. In fact, it had gotten down to about 25, looks like 26, 25.99 back on the trading session of June the 2nd out here. And so you need to be in an extended condition to really have a key reversal. Now, key reversal session will also have follow through, on the next trading session or so. So I would say that even though we see gold at a key reversal session here, over the course of the past week, I've been saying, look, we need to expect bounces inside of Goldilocks. We need to expect bounces, and the reason we need to expect bounces is because of the oversold condition. So now we've got really competing-ish type patterns out here, because there is no question that if you had the art of timing the trade, you would know that what gold has done, it's confirmed an A to B equals CD to the downside. Why? Because it passed the B point, which is the April 1st swing point low of 1277.40, and it did it with volume. Wide price spread, accelerated volume, had everything that you needed in passing the B point to actually suggest to us that the move lower in gold is not over. And at 1216, 1184, the high of December 31st, maybe it's the 1214 area, maybe you go all the way back into the June time frame, the June 28th time frame out there. I know there's a number of different numbers. All the numbers that I would give to you, though, they're all lower out there. So I think you have to be cautious. I would be very cautious, even though it's a nice little bullish sign. I think it's more of a sign that when it fails, it just tells you just how bearish right now Goldilocks actually is. But I'm willing to change my mind when I see otherwise. But real key is going to be to get back above that 1277 level, that April 1st B point inside of gold, and for us to see some kind of real sign of strength out there. But you've gotten a little bit of a key reversal session as we speak here today. So at the moment, things look okay in gold. I don't think it's a trade, but that's what that's what's going on inside gold. Silver, let's take a look at silver. It's up 19 cents. It's up a little bit over 1% here. You're going to see really similar candle formation. Gold took 4 days to create its morning star. Silver here now doing it over the course of 5 trading sessions. It too has a key reversal session as we speak right now. But I don't think that it's silver necessarily that is going to go ahead and carry gold higher out here. But who knows? Could be just carry gold butter. What silver is managing to do, though, and this is kind of interesting, what silver is managing to do is to reject the December 31st lows out there. So you'd have to say, hey, that's pretty impressive, because that low being 1872. So it has tested that now, looks like, for the last 4 or 5 trading sessions. Also tested it all the way back here on the session of May 2nd out here. So silver really trying to maintain and hold its lows out here and build a little bit of a base. So silver is, considering it is weaker, has been weaker, certainly just in respect to getting all the way back to the December 31st area. It's pretty good. It looks pretty good. It's just hard to believe that silver is going to go ahead and right the ship in Goldilocks. That's what's going on there. Let's go take a look at light sweet crude. That's off 90 cents this morning. Right now, if we take a look at the daily contract, this is the June contract out here for light sweet crude. We know that that on May 27th, I can get it out. May 27th had a key reversal session. So, and it was also in an extended condition. So here you're kind of putting together what's going on inside gold, what's going on inside of light sweet crude. Now its retracement level this morning, thus far, has dipped below 102.06. Why is that important? Well, that's the dead cat bounce. That's the 0.382 retracement. We've seen light sweet crude get down to that area, then bounce a little bit. Now, and it tried moving higher yesterday and it sold off. Now it's below 102.06. It says the next target becomes your 0.618 retracement level, 100.54. That is likely where light sweet crude is headed. Right now, the Dow's up 21, S&P is up 1 point, NASDAQ up 8. We'll be right back.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. We've got the Dow's up 26 points. S&P is up 1. Composite is up 8 points right now. Russell up 3. And we began the show, we were taking a look at Bank of America. Let's go back and take a look at the Bank of America chart out here. Now, what we've seen here, 240-minute time frame. Kevin from just down the street in Tampa, in the Clearwater area, had called. And we're taking a look at the market profiles created by Taz out here. The 240-minute chart is what's up on our screen. Now, it identifies 1535 as what's referred to as that unfair high. Also, I like to refer to it more as resistance. That resistance point, if we take a look at today's action, 1535 thus far has been the high today and has not been able to clear that hurdle. Closing about 1535 on a 240-minute time frame. That would be a bullish sign out here, but you can see how that has acted as a resistance. So with regard to better buys out here, your better buys, if somebody were going to try to play this on an intraday basis, is a break above resistance. Why? Because old resistance should become new support, or you're better off trying to buy it from the so-called unfair low, from a support level, which with inside Bank of America, it's at 1502. But as Peak D indicates in the addendum, as we pointed out, a huge supply line overhead, huge supply line, as folks were jumping out without even parachutes on inside of Bank of America. So I'm not recommending this as a trade, just simply going back and taking a look at it, see what's going on in price and how did it just simply magically stop at 1535 out there. Now, what are we going to do here for the day? Well, for the day, what are we going to be paying attention to? Number one, the Bears still have control of the New York Stock Exchange. They have control, but they weren't able to do much in the way of price damage yesterday. In order for the Bulls to effectively take back control of the NYSE, it's going to need 552 or more net advancing issues. As we speak right now at 9:56 a.m., 219 net advancing issues out there. In the New York Stock Exchange, it's up $6 right now. If we go take a look at the NYSE, Steve-O, where is it? It should be right here in front of me. There we go. If we take a look at it and I blow it up on the screen, it's actually trying to complete a to B equals CD that would take us up into the 10,970 area. But as I say, I expect we see some type of retracement, and it's going to be a nice retracement to buy. The question is going to be when out there. And I'd like to help you do that. Just go over to the homepage of TFNN.com. On the front page, click on my name, Steve Rhodes, straight down there in the bottom. And that'll take you to a little page there. You can click on Mastering Probability. You can test drive that service, 30 days, unconditional money-back guarantee out there. I guarantee you want to be in on the next buy of this market because we are going to have a nice summer rally out there. The market just simply needs a retracement. I can't tell you whether that begins today or it's tomorrow or it's Monday, but it needs a little bit of a breather out there. I suspect what the euro-yen is telling us is it's already started, but it's going to be just a kind of a soft, slow roll. But as what's the lead character in Sanford and Son? I don't know why. But it's not the big one. It's not the big one, Elizabeth. So that's one of the things we're going to be paying attention to. New York Stock Exchange needs net advancing issues of 552. Even though price rise, if you were to look at it, you wouldn't know that Lamont. You wouldn't know that the Bears are in control, but they are. So underneath the New York Stock Exchange, it's got a few problems that it has to deal with out there. So, folks, as always, I do appreciate you investing your time with us here, with me at TFNN, and certainly with us each and every day. And I want you to remember this. I love saying this. I just don't do it often enough. And that's this. You have an amazing power within yourself, and that power, it's so strong, it'll create a life of abundance. It'll cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, it'll create fantastic, loving families. Thank you for being a part of the TFNN family. Have a great day, a great morning. Look forward to seeing you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.